موارد فاينانس فالك طيب.
Speaking about AI, let us move to the next session, which will be exploring the intersection of data, AI, and responsible fintech innovation. AI is everywhere in the news, and there's a lot of things going on. Let us invite four esteemed panelists who know a lot about it, and they can bring a lot of insight to the room. Let us start. Help me welcome Ashwani Roy, partner from ALP in UK and UAE. And Fadi Azar, CFO at Falcon Technology. Fadi. And Shiraz Ali, CBO at Nimcard. And from Dhahaby, the founder and CEO of the startup, Rikin Patel. Okay, guys, before we jump into the questions, I invite you to look again at the pamphlet in your table, and with your phone, scan the QR code on panel number 3. You will find some voting questions to get your insights. Please vote, and the results of your vote will be displayed directly on the screen in front of the panelists, in which it will guide the discussion. So today, we will try to answer the big question: how can fintech balance the transformative power of data and AI with the growing need of privacy, regulatory compliance, and responsible innovation? We can talk a ton about it if just you see what's going on between OpenAI, Google, DeepSeek, and others. There's a lot of things going on. So let me start with Ashwani. How can fintech responsibly integrate AI and into risk decisioning as they grow?
So one of the things that regulated institutions need to think about is the risk that comes before you embark on this journey. And when you look at what regulators expect from you to do, is to make sure that you have transparency in your models. So they cannot be black box models. You have no data biases. You are compliant in terms of usage of the data. But in terms of how fintechs should be using, and the way we are working with fintechs, is there is a lot of alternative data which is around non-transactional data related to news, social media, other textual data, meeting events of companies or individual profiles, and so on. And using this alternative data has been, never been easier than now. You can sort of apply them on alternative credit models, for instance. You can apply them on fraud and AML, anomaly detection, and these are the very fundamental use cases, either during the onboarding and KYC process or during the underwriting and loan disbursement process. So both on the credit risk monitoring side as well as on the ops and KYC risk, these two sort of factors become a lot more advanced with the use of things like anomaly detection, with things like alternative credit models, with things like the sort of knowledge graphs and other heuristics algorithms that are available, part of the AI suite.
Yeah, amazing insight. It's there's a lot going on, and a challenge which a lot of financial institutions, banks, and fintech, they don't know, is the AI mature enough yet to be deployed in my systems? So obviously they need a lot of help from you guys to navigate that. Thank you very much for these insights. Okay, so moving to Fadi. Fadi, you come from a security background. How AI is transforming fraud detection, and what risk should fintechs be aware of?
Thank you for the question. Now, talking about AI and fraud detection, especially in the fintech space, we are seeing a real shift. Traditional systems rely heavily on fixed rules, and it cannot keep up with the evolving fraud tactics. So AI, especially the machine learning, can study a massive amount of data and detect anomalies which human and old system cannot do. How fintechs can translate this? They can get faster response, fewer false positive, detect accurate detection. So it's not just a technical one, it's also they can enhance the customer experience and the trust of the customers. So, coming from the physical security side of things, and what's exciting for me is how AI is trying to make the bridge and connecting the dots between the physical and the digital realms. So now we can see AI in biometric access control, we can see AI in facial recognition, CCTV analytics. So these tools translate real world behavior in real time. So if fintechs think holistically and apply these tools and connect the physical security data with their digital fraud detection system, they can have the full pictures. For sure, everything has a downside. Even the physical security has its own manipulation. We can see spoofing of fingerprints now. We can see tricking facial recognition. There is always bad actors in the market who are trying to mimic legitimate behavior. So it's very important for fintechs to invest not only or to rely not only on the power of AI. It's good to invest on both cyber and physical security, because this will give them the opportunity to be transparent with their client, to have a constant revisions of their models, of their data training. At the end of the day, AI is just a tool, and it's as good as it gets how you apply it responsibly.
Of course. Thank you, Fadi. It's one thing we don't realize, that bad actors also have access to this technology, and it's easy to surround yourself with a lot of walls. But at the end, you mentioned the golden word: our user experience, our customer experience. How we can utilize the best-in-class technology without hurting our user experience. Very insightful. Thank you very much. Shiraz, I move to you from your experience in Nimcard. How can payment platforms use data and AI to improve user experience without compromising its security?
Yeah, thank you. Before that, I'm very happy to be here. Thanks to Mawarid team for organizing the event. Very happy, very thankful to meet the industry leaders here and have great conversations. Coming back to your question, we at Nimcard have seen a transformative shift in the way people are now using data and AI, both from the perspective of enhanced user experiences, the value propositions, such as now you can have a decision at a point of sale instantly whether you want a loan or not, the buy now pay later aspect of it. The AI can scan, as my friend Fadi was saying, can scan millions of data points instantly. It can create my profile based on my online presence and what I do or don't do, what I post or don't post. It can create instant decision-making for loans, as I said. It can hyper-personalize the experience of a customer with regards to my past behavior, my predictive analysis of what I'm more inclined to buy or purchase. It can give offers instantly to SMEs, for example. It can identify, this particular SME will be needing a working capital on 28th of April, so it can offer contextualized messages. All of it is now available, and it's not a thing of future. This is what we are already seeing. Some of our clients are already using these services from us to actually make a difference in their respective target markets. Now coming to everything has a cost, as you rightly said. Now, there is a value, but then there is a risk as well, which is the topic of the conversation also, of how to avoid negative use or wrong use of the same information. That's where the regulators and industry players have done a lot of work with regards to creating the governance framework. Consent management is one, stricter transaction monitoring is one, stricter controls around how that data can be ingested into the models, right? That is why we keep on saying and strongly recommend clients and banks and other parties to work with players who have not only got the product but also the licensing, the regulatory certifications, the strong governance framework to make sure that that data, which is personal and private to me, I don't want that data to be out there in the market, right?
Of course.
I'm allowing bank A or client A to use that data for a specific purpose, and that has to create a trust relationship with that particular client. The data cannot be leaked out. That is where there are strong models now utilizing third-party support systems, utilizing central bank licensed entities, regulated players, certified platforms to make sure that the data gets controlled in a way that even, for example, in Nimcard, even we internally don't have access to customer-specific data. The systems take care of it themselves. The encryption is, I don't know, triple DES or 4DES or whatever the technical word for it. My security guys would know better, or the audience. But it is protected to that level. That everything gets replaced with one number. You can't do anything. You can't reverse engineer that number, right? And that's how the customer should get that trust and belief and confidence in the platform to be able to let go or to allow the third party to ingest their data to make those interesting use case alive and possible out there in the market. That's how what we are seeing in all the 10 countries that we operate in. Different use cases, localized to the country specific thing, but a very powerful construct coupled with very strong regulatory environment and controls on the platform.
Okay, amazing. Well, if I am a user using any payment platform, or I am a financial sector partner, I would have a more comfort to know that I am partnering with a security-aware payment. Thank you very much for that. Okay, let us move to a different perspective with Rikin from Dhahaby. All fintech will be building technology which they will put a lot of effort, and they want it to scale up. They want it to serve multiple jurisdictions. So what compliance pitfall from your expertise do you see when fintechs scale their AI models across different jurisdictions?
Sure, thanks. Thanks very much for the question, and thank you for allowing me to speak here at the event. Look, as a fintech, when you want to scale across different jurisdictions, the key challenge really is that there is a very divergent regulatory landscape from country to country and region to region. And the challenge that we face is that there is no harmonized AI regulation. So you have to take effectively almost a modular approach to your compliance when it comes to AI. You know, if I give you examples, you have the EU, which has the EU AI Act, which is amongst the most stringent in the world. If you're looking at things like credit scoring, you know, they're particularly harsh in terms of the requirements for transparency, in terms of the requirements that there is no bias, you know, the protection of data, so on and so forth. You look at a market like the United States, they have almost a different approach where some of the elements are really, they're more sectoral in nature, so they will rely on regulation from the SEC rather than specific mandated AI compliance. And then you have, you know, big nations like China, where the focus actually is on data sovereignty and keeping data in country with what they call PIPL, personal information protection law. And you have, a middle ground in places like Singapore where they have, MAS has something called FEAT, which when it comes to AI, they're talking about fairness, ethics, accountability, and transparency. So, particularly if you're an early stage company, a startup, it's a lot of stuff to understand. It's a lot of stuff to customize. You then talk about how you handle this and how you mitigate it, right? It's interesting that the consensus from the audience is that data privacy is the most important thing. Well, when we deal with regulators and regulatory authorities, that comes across as well, and I would echo that. So in the EU, we all have GDPR, which we know is the most stringent regulation in terms of receiving consent from your end customer as to what data you have and how you can use it. And then not only that, but the EU requires you to minimize the data usage. Similarly here in the Gulf countries, in the Arab world, we have PDPL in the UAE. We have a similar construct in Qatar. We now have, an AI office in Saudi Arabia that is providing oversight. So these are all things that as startups and as players in the space, we need to understand and we need to act upon in the way that we implement. And the big challenge, because of course, data is like, from my days in banking, when we created a financial model there's an impolite way of saying it, there's a more polite way, which is GIGO, garbage in, garbage out, right? For the AI models to be effective, it relies on the data that you have. If you're not allowed to transport your data across jurisdictions and utilize it, how do you handle that? How do you overcome that challenge? Well, the solution really is to use something that we call, leverage what we call a federated learning model. So what happens is that, you train your model on local data sets, but you don't actually ever transport the raw data out of country. And then you have a master global model into which those learnings feed. And you have to have the smarts to be able to adjust the weightings of what's coming out of the data sets that you're analyzing in different jurisdictions. Beyond that, we also have to consider the element of fairness and ethics that the first panelist had spoken about, to make sure that there is no bias within your model. So there can be bias in your model because there is some inherent fault in the way that you've designed it, but there can be bias because the data is inherently biased because certain communities may be underrepresented. Right? Now in the US, you can get wrapped on the knuckles with something called ECOA, the Equal Credit Opportunities Act. And if you are unable to demonstrate to your regulator that your data is fair and it's not biased, you can land into hot water. So we have to effectively implement something called explainable AI, where we can explain in simple and understandable terms to the regulator, and I suppose to anybody that has an interest in it, how it is that our AI is arriving at the decisions that we make.
And this should be tailored to each jurisdictions and the
correct. So it's kind of a lot to ingest, but that's startups are hard enough as it is. FinTech startups are an order of magnitude harder because of the incremental regulation and hurdles that we face.
Amazing.
And the last thing is of course cybersecurity. We because of the volumes of data that we are handling, we need to pay close attention to cybersecurity. We have to comply in the European Union with something called the NIS2 directive. In the United States, there's a cybersecurity framework that we have to comply with. It's more reactive in that sense. But it's effectively these four areas that we need to pay attention to. As if we didn't have enough to do with building apps and integrating. This is on top.
Well, guys, this expertise and insight don't come overnight. It's a lot of work, a lot of effort, and a lot of staying updated on what's going on. Okay, I guess we have time for one question from the audience. Anyone would like to step in and ask our panelists any question?
Compliance makes people fall asleep. No, we do have a question.
Thank you.
we all know that AI is emerging and that there are talks about large language model, generative AI, AI in CRM, AI in security. So I think there is a need to granularize that what part of AI and what part of fintechs. There is a mapping required, and then a comprehensive strategy at organizational level, either or at a regulatory level, or as an industry level, as a general guidance for the industry. This kind of because AI, talking about AI in general, it has got so many things, not just one. So is it something that the experts or the organizations are looking at?
Anyone would like to answer?
Maybe I can take it. Very valid point. It's a spectrum. There are a lot of things that can happen, are happening. The way we do at Nimcard is basically outside-in perspective on things. So it's the value proposition driven. We start with what the customer expects or requires, or if there is a pain point or a way to make the end customer lives better. It could be, as I said, an instant credit decisioning method based on alternative data sources. It could be a use case of hyper personalization of a customer's platform or his experience. Totally two different use cases, and different models are required to serve that use case. So once we identify that there is a need or a pain point that can be addressed, then we work back. Obviously, you need to have your backend systems controlled. We talked about BPDL, we talked about other cybersecurity elements, encryption, all those things, Privacy Act and ethical, and all. That need to be there, which is the baseline. But then you build the modeling on top. Now, again, there are multiple tools available. There are multiple ways of skinning this cat. But the way we do it is not something that we have thought of in a lab and then we push out to the market. Is basically outside in, because the variations are there in those modeling. Different use cases, different ways of adaptation, different ways of offering, different ways of controlling. As long as you have the basis covered with a very strong framework, I think then it's only a matter of building on top. So the way we do it is in coordination with the regulator, as my friend said. Like or not, this region is fragmented. It's not like US where you do things in one state and automatically you can do the similar things in all the other. Every country has different rules and regulations. Some are mature, some are in the emerging state. So you need to work closely with the regulators and other industry players to make sure that what you're offering at the end of the day satisfies all the requirements, because at the end of the day, nobody wants the customer data to be compromised. And this is how we do it, but happy to let the other panelists speak about it too.
Yeah, so I'll be very brief. Gen AI is only 1% of the total AI enhancement that you'll see in future. We are just scratching the surface of what AI can do, and Gen AI has made it very popular. A lot of people are able to use it. First time I started doing AI is in 2004 when I joined Microsoft Research. Right? So we have been doing AI in automated, aircrafts and autonomous vehicles and things like that for extremely long time. Each of those segments have their own set of regulations, and the regulation seems to evolve with time. And as Rikin said, and as my friend, sorry, I forgot what Shiraz said, there's an evolution tree. There are thought leaders like from US as well as from Europe, and from those thought leaders there's a adaptation that is going on with the other AI regulators in the region. So just like any other financial regulation that comes out, let's say from FCA, and that gets adapted by SAMA and CBUAE and so on, there is a thought leadership that goes up, and where most of the enhancements are being done, and then there is an adaptation then going on in the region. But Rikin talked about it. There's a lot of region-specific modifications that will happen to these regs, and you will see them changing quite rapidly.
Okay, thank you very much, gentlemen.